Hi, guys. Happy Friday. So I'm here with Alex today, and we really just wanted to educate you guys, right, about credit. I'm a mortgage broker. I learn something from her every single time we work together and have a client. And I know your real estate agent is telling you this is the perfect time to buy. They're not lying. However, we know the state of, you know, the nation right now, right? Gas is crazy, inflation is crazy. And so if you're priced out of the market, if you're waiting for a better time, or just to get education, right? We wanted to talk about credit because this is the perfect time to start working on that, building that, and educating yourself around that. So, Alex, go ahead and introduce yourself and tell everyone who you are.
Well, thank you first off so much for having me. I'm so excited to be here. I just absolutely adore you and the way that we are able to connect and chat. And I grow from you every time we talk as well. So thank you. And a little bit about myself. My name is Alexandra Erlich, and I started in the subprime mortgage world back 30 years ago. Like I did the math and I looked it up. I looked at one of my old pay stubs, was telling my daughter about this. I hit 30 years this year. Actually,
Congrats.
oh my
That's
gosh, can I show
awesome.
you something? Can I
Yes,
show you something? Just
absolutely.
because, okay. Back when I started in mortgage, we had to use these.
Oh my
These
gosh.
these were our payment calculators. And then we
No
had to
way.
use, oh yeah, and these.
Taking it back. Taking it back.
Yeah, no, look, and look at what the rates were.
What does that say?
It didn't, well, it
17%?
6 to 17. It didn't go below 6%. I could
Oh my
not give
gosh.
somebody a rate below 6%
That's
because I couldn't do the
wild.
math. I couldn't figure
That's
out the math.
wild. Oh my gosh. And we're like, 6%, go back to 4.
Right? Well, and again, up to 17. Like
That's crazy.
we talk about money all the time. And I love that you brought up what is the day and age? What are the buying decisions? I also want to put out there, what if you already own your house? What if you own multiple properties and you're listening to this? This still applies to you. Do not turn off your camera. Do not turn off your video. This still applies and is relevant. We go
Mhm.
through multiple stages and phases in life. And there's a funny cliche saying in the real estate world is that there's 5 Ds of real estate. Have you ever heard this one?
I haven't heard this one.
Okay. So there's diapers, diamonds, diploma, divorce, and death.
Okay.
And
Okay.
let's be real. Most of us are going to have at least 3 of those milestones.
Yeah.
We are at some point going to get a diploma of some kind. It might be
Mhm.
from kindergarten, it might be from high school, it might be from college, doesn't matter, doesn't judge. We're at some point going to have either children of our own or have some form of a marital or life partner relationship or business relationship.
Right.
That diamond could be the epitome of our career where we're leveling up, and then we're all going to die. I hate to say
Yep.
it. I don't say it negatively. It's just kind of an undisputable fact. Of all the things anyone can argue with me about, that's not one that you can argue.
Right. Right. It's going to happen. We want to be prepared. We want
Right?
to be ready, right, for all of these stages. So that's why we're
Yeah.
here to educate you guys, right? Or ask the hard questions. Even some of these questions, thank you guys for sending them in. Some of you guys sent me your questions and we're getting them answered today. And some of these questions I don't actually even know the answers to. So I'm excited because I'm going to learn something new today. But let's jump right in. So, first question I wanted to ask is what is the number one thing that hurts most people's credit right now?
There's actually 3. I'm
Okay.
sorry. I know you're asking me for a top one.
No,
I'm going to
I'll
give
take
you
three.
3 anyways. So, number 1, not thinking ahead and not thinking of the goal. Biggest issue I see every day is, "Oh, well, I knew at some point I was gonna do something." Okay, what were you thinking you were gonna do? I don't know. So let's always think of the goal, and when we talk about a goal, I don't know if you've ever heard the expression, "a SMART goal." We
Mhm.
wanna really peel back those layers of the onion and go, "This is clear. This is crystal clear. I know exactly what I'm going for. I'm not going for my forever house. I'm going for a starter home just so that I am owning and building equity.
Yeah.
Or I am going for my dream home, or I'm going for owning 8 properties in the next 3 years." That is clear.
Yeah.
So Problem number one, not being clear about where we're going.
Okay.
Problem number two is listening to the internet. And yes, I know we're on the internet now, and we are speaking in complete sentences. Okay.
Yes.
There is all of this content, all of this data. And I'm not going to say any of it's bad. I just will simply say that for 90% of all people, 90% of the data doesn't apply to them.
Right.
Like or it's even like the 1% rule, the 2% rule. 2% of the people make 80% of the
Yeah,
wealth, whatever it
90% of
is.
the income. You're right.
Yeah, there's all these things, but let's be real about that. If there is tens of millions of people putting out content, there's probably some level of this is either very, very general or I have no clue how to make it mine.
Right.
So listening to the internet without any guidance and without any clarity about how that applies to them and just going all in on all the channels. What I see every day, and I just want to break it down for half a second, is the most common someone calls me in their mid 30s and they're like, Alex, I've never been able to understand credit. And I'm like, okay, tell me more. They're like, well, I have 8 apps. I'm like, okay. I have 8 appointments next month too. Oh, you meant the thingies on the phone. Um, I'm old. Chips are still for dipping into sauce, not into a money thing.
Yeah. Oh my
I
God.
try. There's a reason I'm not a stand-up comedian. I would not get paid. But they're like, I've got 8 apps. I'm like, okay, that's cool. That's exciting. Should you have 10? They're like, so Experian told me that I needed to add all my utilities. I did that. Credit Karma told me I needed to open 3 more cards. I did that. Credit Sesame told me I needed to give myself a secured loan. I did that. My bank told me that I should consolidate it also. I did that.
Oh no.
Well, here's what's going on. Each one of these things in and of itself is not wrong, but if we're doing it with no direction and we're just going,
Right.
next thing you know, we're way off track,
Yeah.
especially from that actual goal, that actual dream, that actual desire and capable end place. So that's number 2. Number
Okay.
3, and this one's a double-edged sword, is either buying so far into the myth of Dave Ramsey and culture and saying, I am not playing the credit game at all. Well, if you
Mhm.
can't play, you can't win.
Right.
And I see it both culturally as well as like economically, socioeconomically, where people are like, yep, got into trouble with those credit cards the first time. Yep, read Dave Ramsey, not going to do it. All of the things. And we have to balance that out and say, we don't have to have credit and debt. They don't have to be equal, but we do have to play the game to win it. And I think that there's just so much fear
Mhm.
around overdoing it that
Right.
people don't step in. And like one of my favorite quotes that I've been hearing a lot lately is progress over perfection and just taking a step. Like we have to take a step. We have to participate.
Yeah. And have the conversation, right? And it's great to like, with you, your clients can come and like break down exactly what they're going through. So then you can tailor a plan for them, which is specific to them, which obviously is helpful. However, I do have a lot of clients, and I have to put this in this section because um, a lot of clients go to what are the companies called?
Debt
They pay a
settlement.
monthly fee and to fix their credit. And every single client that I've had that has come to me, it's like, I've been paying them for 2 years. I've been paying them for a year. We've been doing this for a year and a half, and I don't see any progress. And so I would just urge you to like do all your research before you get into bed and start paying a monthly fee to someone who says they're going to fix your credit. Like, make sure you know how they're going to fix your credit. You're following up, you're actually seeing results because a lot of times you will be paying for 2 years where we could have used that money to really help your credit in a shorter amount of time, and they just took your money and did nothing with it. So that's also
Can we talk about that for a sec?
yes, no, let's dig
Cool.
in.
Let's talk about that for a sec. So, what is the traditional credit repair model? And what are some things that if we're going to go ahead and do it, we should ask to make sure we're doing it at least to the best of the worst?
Yeah.
And I'm not going to name any names. I'm not going to specifically talk smack. I will simply say that for most people, instead of paying a monthly subscription and a monthly enrollment in a credit monitoring, if they applied that same money to paying down their bills, they would accomplish more faster.
Yeah.
And um, the traditional credit repair model, it's really interesting, kind of like to bring it full circle, talking about the different snippets and things we see on the internet. I am getting at least 20 reels shared with me a day by different lenders and agents throughout the country. They're like, is this thing real? There's a new credit reporting act. There's a
Yep.
new thing that Trump just passed. There's a new thing. And I'm like, you guys, this stuff's 40 years old. There's nothing new about it.
It's just
This
resurfacing.
new, yeah, this new scoring model, let's be real about it. Vantage 4 that you guys just got approved to use in the mortgage world is
Yeah.
over 10 years old.
So
Look
it's
at when
been
it was
around.
incepted. Like, this stuff's not new. It's not cutting edge. Just because we didn't talk about it doesn't make it new. So
Yeah.
here's what's happening. In the traditional credit repair model, this company is logging into your monitoring, which, by the way, they're getting paid an affiliate fee on. They're running your data into a computerized system, and they're sending dispute letters. Now, this creates a couple issues. It creates an issue for Martiana on the actual mortgage underwriting side. You might be looking at your score every month going, yeah, woohoo, I'm at a
Great.
640, woohoo, I'm at a 680, woohoo, I'm at a 700. And here's what you're not looking at is the data in that report. You guys,
Mhm.
please do me a favor, look at the data, ignore that number for just a second. Use the number for a trend, fine, but ignore the number. Look at the data. Here's why. If you end up with dispute verbiage, that's actually removing that entire account out of your scoring equation. That's what's giving you a falsely inflated score, but now creating an underwriting problem that says, oh, we've got to either take this account out of dispute or, like, if we do, we're going to see that score plummet back down.
Mhm.
So they're throwing all these accounts in dispute, sending letters. Sometimes they'll send them to all three bureaus. Sometimes they'll send one for one account and just try to milk it more months. Um, if you're not seeing deletions, if you're not seeing response in 90 days, something's wrong. Here's
That's
why.
good.
The
That's a good
actual
rule of thumb.
laws, yeah, the actual laws say that the bureaus have 30 days to respond. Then the creditor has 30 days to respond, but they also have to give you documentation. So they have
Mhm.
to say, here's the person I talked to. Here's why they have authority to tell me whether this account exists. Here's everything they showed me to prove that this account is yours and is accurate and should be on the bureau. If all those things aren't done, they have to hit delete. And they don't because this model doesn't hold them accountable. And the reality is they're getting tens of millions of these requests per day. So let's be real, they're not getting opened. That traditional mail concept doesn't work the way that it once did. And what I will say, if you're going to vet these companies, ask them number one, or actually, better yet, their very first question to you should be, what is your goal? And if your answer is an 850 and they don't probe any further, that's a problem. They should be asking, what's your real goal? Oh, you want to buy a house? Awesome. I know the mortgage underwriting criteria and I'm not going to violate it. Question number two should be, what's your actual timeline? Okay. You want to do this in 3 months? Okay. Either we can or we can't, or let's at least give you some solutions that work within what you want. And
Yeah.
question number three should be, what's your reality? I talk to people every single day. I know you do as well. That honestly, the correct answer for them is they should go file bankruptcy because then they're going to get to that finish line and be ready to buy in 2 years, which is way faster than them living paycheck to paycheck and not being able to put food on the table and working 4 jobs and not remembering their kids' childhoods. That
Yeah.
that is the whole point of why we do it.
Right. Exactly. I agree. Those are good. That's actually good so that somebody can kind of vet those companies and figure out where the best place to go is and have a timeline for if I'm not seeing movement within this time. Okay, we're done. We're going to go somewhere else and figure it out. That's why then, you're not wasting money and time. So I love that. I love that. So that rolls into my next question. How much available credit should someone keep open?
So we want to keep as much as we possibly can. Like if we can have it all open, great. This is a way that we can actually pre-position ourselves for any pothole that ever is going to be on our road of life. Like let's be real, we're driving down the road. We are going to have potholes, especially here in the US. And I mean, I live here in Colorado. We get some of the worst potholes ever. Like they could eat my car sometimes. And with that though, like if we have all of this access to credit and we're gaming the game, the magic number, honestly, is below 9.9% of your limits. That's the
Okay.
magic number. You're getting all the goodies.
Okay.
And there's never anything wrong with being below that number. And the crucial thing to remember is that that's on the statement cycle close date. So every single month, you're going to have a statement cycle close date and a due date. They're totally different dates for most accounts. Whatever your balance is on that statement cycle close date is what's going to report for the next 30 days. So if we can afford to pay it way down, but 2 days later, we need to max it out, that's fine. It's a way of tricking the computer's visibility. Like, okay, maybe cheesy analogy, but we've already illustrated that I'm not a great stand-up comedian and it's still going to be funny anyways. Is okay, I might be trying to do online dating and I might end up with a pimple or two. So where I will now put on a filter knowing that by the time I get there and actually get on this date a week later, a month later, it's going to be gone and it's going to be real.
That's actually a good analogy. So 9.9 is the magic number, but most people, what would you say is a good utilization percentage to have?
I mean, I'm okay being below 30%. I think
Okay.
this is also an area where we work most of the time as humans and as the way we've been schooled financially, reactively instead of proactively.
Mhm.
Proactively, when you don't need it, I want you calling every single credit card every 6 months asking for a limit increase. Not when all of a sudden you're already maxed out and you have no idea how you're going to pay your bills and you know you need an extra $1,000. I don't want you
Yeah.
calling when you're in a panic. I want you calling every single time that you absolutely could care less and don't need it and know that you can trust yourself not to touch it.
Yeah. And just build that up, build that up. That's a good tip. What is one credit tip everyone wishes they knew sooner?
Credit and debt aren't equal.
Mm. Okay. Okay. You want to explain that one further?
Sure, there's this huge misconception that you have to have debt to have credit. I personally have over 40 credit cards. Guess what? Only 3 of them have a balance. The rest of them I use twice a year to keep activity
Remotely. Mhm.
and to trick that game of like, I've got all this available credit that I don't use. But here's what else is really neat. I can drop my daily spending limits. I can lock those cards. Nobody can steal them. Nobody can compromise them. I actually just got hacked my Gmail the other day. And guess what? I really wasn't stressed about it. Everyone's like, oh my gosh, have you locked down everyone? Have you called every bank account? I'm like, no, I have a million alerts on everything. If anything happens, I'll know about it immediately. No
Yeah.
big deal.
And your cards that you use twice a year, so every 6 months, do you charge it to something and then pay it right
Okay.
back off?
There is 3 ways that you can do this, okay? Um, way number 1, yes, you charge a pair of socks and you pay it right off. That can be a little bit time consuming. I don't mind that option. I just don't necessarily love that option. Option number 2 is that you go ahead and do a day of shopping. A lot of the cards that I don't use are retail cards. Like I still have a Macy's and I can't think of where the closest Macy's to me is. I have a JC Penney's and a Bloomingdale's. Like I'm terrified that these stores are going to finally go out of business completely because these are like my oldest, longest standing accounts.
Yeah. Oh my gosh, yeah.
So, um, what you can also do, and I've done this before, is go do a round at all these stores, go have a nice lunch, and then go in a reverse walk around and return everything.
Okay. Well, there you go.
Still no debt. And
Yeah,
then
exactly.
this,
But you triggered the card, so it's going to take a
uh-huh.
while for them to return it, so they'll keep them from closing your
Well,
account.
but
That
it also
okay.
tricks it as it's active. It doesn't
Yeah.
even matter if there's a balance or not. It's literally I gave it activity and I
Yeah.
triggered that like I still plan on participating and playing.
Yeah.
The third way is to send in a payment and not have a balance. So again,
Oh, okay.
what's a store that doesn't have a good location near me? There's a couple from the East Coast that I opened years ago when I was traveling. And I will send them a payment twice a year of 20 bucks, just like on my bill pay, pay,
Mhm.
pay, 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 pay. And then they send me a refund check.
I like that. Okay. Okay.
And then there is one fourth way to this. This one is once you kind of get to like that next level of financial literacy. Those first three are truly no debt, no drama, no nothing.
Yeah.
The fourth way is a little bit more gaming, and that is putting a subscription on each card and then auto paying in full. So the average household in America has 5 credit cards, which is what I recommend.
Mhm.
And the average household has 5 subscriptions. So let me just say if I happen to hate a particular bank, and there's a couple of them, and I won't name them,
Same.
there's a couple that I'm like,
A
don't
couple
like
come
that
to
one with
mind.
the one with the choo choo train.
Yeah. There's a couple that come to mind, but yeah.
And but I still love this card and it has a great limit and all the things.
Mhm.
What I'm going to do is I'm going to put Spotify on one, Hulu on another, Netflix on a third. Let these banks pay for the extra step. Not my problem, but I also haven't incurred any debt.
'Cause you were gonna pay it anyways. Yeah,
Yeah, it's
exactly.
just it
That's
didn't
smart.
change my budget. It's still on my visibility came straight out of my checking account.
Oh, okay, okay. Because you have it auto paid to pay the card.
Uh-huh.
That makes sense.
Uh-huh.
Okay.
So they have an
Oh,
extra step,
okay.
I don't.
Okay, I like it. So the next one is, what is the biggest credit myth you hear every week?
Hmm. Um, the biggest credit myth I hear every week.
Mhm.
I think that there's a couple. I'm trying to like what's like the one that I hear all the time.
Yeah, yeah. It could be more than one.
I know. I'm
We
just
love
like
these nuggets.
I want to get
We love
juicy. I'm
these
like, what
nuggets. All of this,
I'm
I've
like,
already learned something in the last what? Like we haven't even been on this call this long, and I've already learned. See, and this is what I'm saying. And I'm a mortgage broker, guys. So this is for everyone. Like no matter what you're doing, what field you're in, like you can always learn something new, right?
yeah. I think that we're gonna keep this answer simple actually.
Okay.
Credit's not for me. I don't get it. I'm just gonna choose not to do it.
Yeah. That works if you have a trust fund and you don't like you can buy everything and which and I get it. If you're in Dave Ramsey's shoes, I get why he doesn't have credit. He self-insures, like he has the money to do that. However, most of us don't have that privilege. I wish I was born rich, but not all
Right?
of us were. So we got to figure out how to make the system work for us. And like you said, without you're giving us these great tips that we don't have to incur a bunch of debt. And I think that's the misconception, right? I'm going to get a credit
Yeah.
card, I'm going to get into debt, and then I'm not going to be able to get myself out of it.
And it's also these other things too, like of oh my gosh, my first car loan is at 18%. I guess I shouldn't buy the car. Well, let's stop and really look at what is the hard cost of that decision. Not
Mhm.
the cost of the 18%, the cost of the decision. You hear the difference? Like
Yeah.
it's if I don't buy the car at 18%, I never build credit. If I
Mhm.
don't buy the car at 18%, perhaps I can't get that better job. If I don't buy the car at 18%, then now I'm paying $500 a month in maintenance. And let's even break it down further. If the best rate in the market right now is 5% on a car and I'm paying 18 on let's call it a $20,000 car. I know those
Mhm.
are harder to find, but like you can still get a good solid car for 20 grand
Yeah,
that has a
definitely.
warranty and stuff. I mean, we're only talking about $300 a month difference, if that.
Yeah.
So $300 a month in payment and building credit and having a warranty and having all of this different protection, or spending $500 a month in maintenance and losing $500 a month in income, and
Mhm.
like the cost of not acting. And I know you probably talk about this with mortgage all the time. Like the actual best time to buy was yesterday because we would have already built equity.
Right.
And tomorrow's just as good if that's the
Yeah.
right time for you.
Yeah, whenever is the right time, and that's another thing, right? Like, same with your car analogy, like with the house. You're married to the purchase price. You're not married to the rate, and we all know
Well,
that,
you're also
right?
not married to any of the things in it. Like,
Yeah,
okay, I've replaced the carpet, I've replaced the lighting, I've replaced the ceiling. Like, I've done all kinds of work at my house.
yeah,
And like some of the homes I've renovated, I've really loved. Some of them I've been like, okay, I know this is not my forever home, so I'm not going to do it customized to me.
yeah,
I'm gonna play with that entire concept of what really balances my objective.
yeah. I agree. I agree. What is one thing every future homeowner should start doing this month?
Being aware of where they stand and create in working backwards from that end in mind.
Okay.
And what I mean by that is even that so often we think that our house that we buy because we're buying it, like we're stuck with it.
Mhm.
Because that was our parents' philosophy or our grandparents' philosophy. They bought the house the minute they got married and they lived there until they went into a retirement home. Or I actually had an agent phrase it really cute. At least I liked it. That they're like, it was the toes up home. They left when they
Oh,
were toes up. And I'm like, that's
that is a cute
cute.
way to say it. That is a cute way to
Or
say it.
or they left it as the legacy. It was the legacy home, like, where they envisioned and built for generations and generations to come.
Mhm.
That's not really the world we live in anymore.
Yeah.
I wish that I was able to give my kids their childhood home? I mean, in theory, that sounds lovely. My daughter's gonna be 20 next week, my son's 16. Would it be lovely to say, "This is the house I brought you home to"? Yes, and looking back on that house, goodness no. Looking back on my marriage that I've been out of for years, goodness no. Like, I am so proud of the fact that they get to call this their home and that my daughter gets to come here and come home from college and like have her space that she
Right.
like built her identity in. Um
Right.
some of those same old emotional concepts have evolved the same way that mortgage lending has.
Mhm. Yeah, that's true. That's true. Monitoring is a big thing, guys. I know that I want to say they were I saw some quote that was like, or some statistic that was saying like between 18 and 25 is the age group that gets the most not hacked. Their
Identity
identity
theft?
stolen, yeah, identity stuff and stuff like that. And the reason was because they don't monitor as much as everyone else. So
Hmm.
now we have all these alerts and things like Alex was saying to kind of let you know if anything's happening, but it's still important to pay attention. Like, how are you tracking your progress? If you're serious about owning a home or getting a car or whatever your next goal is, knowing that you're progressing and going in the right direction is important, and you're not going to know that if you don't monitor. You can't just do all these steps and then just like, okay, we're just going to leave it alone and then
Let's up that though. Let's like take that to a level
the next
400.
level. Yeah,
Okay. Two things. The statistic is not wrong. However, the statistic is not complete.
yeah.
It's actually 0 to 25. The reason the statistic
Oh,
doesn't talk about 0 to 18 is because they can't. They can't quantify it because those same people aren't applying for credit.
right.
However, If you're 18 and you've already had identity theft, it probably happened when you were 7, 8, 10, 12, 14, 15. It didn't happen the second you turned 18. So
Right.
the actual statistic should be 0 to 25. So first and
Mm,
foremost, let's even go into that. If you have children yourself, or have friends with children, or have grandchildren, or are thinking about having children, the minute they get a social security number, lock it, freeze their credit until they turn 18
okay.
or 17 at least. They
Yeah.
don't need it. They can't use it. They can't sign a legally binding contract. There's nothing lost by freezing it and everything to be gained.
Yeah. Keep it safe, keep it protected. That's a great
Yes.
tip.
And with that same thing, please, parents, hear me loud and clear. Do not add your kids as an authorized user at least until they're 14,
Okay.
unless there is a valid reason that they need a card in their name. Okay. What I mean by that, my daughter, I added her as an authorized user on cards of mine when she was 13 and 14. The reason I did this is she was traveling internationally without me and needed the card to match her passport.
Okay.
Otherwise, they would not accept payment.
Yeah.
Otherwise, it would have been sending her with cash, which is way
Yeah.
more risky.
No, yeah,
I'd rather
no.
her with a card anytime. Also, though, because she was traveling internationally, where do I want my single minor child? I want them in the Amex lounge that checks ID 3 times. It's the most secure place in the airport I can put my kid.
Yeah.
So I added her. However, my son is 16. He turned 16 back in January. He's just now going on his first international trips this summer. I just added him in the last month. Now, has he had access to my cards? Yeah. But I just added him this
As an
month as
authorized
an
user.
authorized user for him to have a card in his name. Why do I say to wait? Here's why. Stop for a second, close your eyes, envision, and think back all these
Mhm.
years.
Okay.
Think back the last 14 years. How many of your cards have you closed? How many have you potentially gone late on one time? How many have you possibly forgotten all about and had a late annual fee? How many have you maxed out? How much of your life has changed, even in just the last 10 years? Let's even say the
Mhm.
last 5. You can give your child all the benefit, all the benefit of like giving them an immediate 800 credit score at 18, it within 30 days or less, that you do by adding them earlier. If you add them earlier, you put them at higher risk of identity theft. And that's where, especially if you add them earlier, my daughter, I froze her credit. I was not going to give her a card with her name, with her credit being unlocked.
I like that. This is a question that
Yeah.
I actually asked you a couple months ago too, because I have 2 kids and I was like, what is the right age to start building? And that was something I didn't even know. And I was shocked by the answer being 14 because I was like, oh, I thought I would have to do it sooner. So I was like, okay, I have time. But no,
Yeah.
I'm glad that this came up because I've gotten asked this question and I've asked you personally this question. So
Yeah. And then to even go further into the monitoring piece, you guys, this might be an old school adage, but it still rings very true. If something sounds too good to be true, it probably is. If something is being sold to you, think why. If something's
mm,
being offered to you for free, think how. What I mean, Credit Karma. Like, I'm not picking on them. I think that they have good data. What I will say though is they have to pay for your data. They have to buy it from Experian, Equifax, and TransUnion. And even if you're on Experian itself, they still, as an entity, part A over here, consumer side, have to buy from the clearinghouse of data storage. So they have to buy your data. They have to pay for the website. They have to pay for secure servers to house your data because of all these breaches. Then they have to have customer service reps. Then they have to have all of these things. So if they're giving you your report for free and
how?
monitoring for free, yeah, how?
How?
Where? Why? Like,
How are
why
they
are they
making money?
doing it?
Hmm.
Also, let's be real. Credit Karma is not a nonprofit. How many of any of these monitoring sites are a nonprofit? The only one, at least that I'm aware of, the only one that is a nonprofit is annualcreditreport.com.
Okay.
Every
I
other
didn't know
one
that.
makes money somewhere, somehow. And usually it's the banner ads. Usually it's the ways they can market to you. If you're
Yeah.
playing with their credit enhancement tool and you're like, yay, what would it take for me to get here? What's the next thing that magically pops up in your feed? Like, let's go back
Oh,
to
this
dating.
card. This, yeah.
Yeah. All of a sudden you're like, ooh, right, right. Guess what? All those things that start popping in there start looking very similar to that, right?
Mm-hmm. Mm-hmm. Oh my gosh, that's funny. So now let's brag on you for a minute because you have helped me so much with my clients. Guys, Alex is actually my credit specialist that I use for all of my clients. So when someone comes to me to get a mortgage and we need to get to maybe even the next tier for a rate drop, or there's some things that are on the credit that I don't want to submit to underwriting and I don't want them to see, Alex is the girl that I call. So, what is the biggest score increase you've helped someone achieve?
I mean, technically 805 points.
There you go.
My daughter, I mean, we went from 0 to 805 and technically did it in under 90 days.
Crazy. What is the biggest increase you've helped from like
A client,
a
yeah.
client?
As
Mhm,
far as
mhm.
actually getting from a like, "Oh my gosh, I went through this life event. Here's what happened. Here's I'm not starting in an ideal spot. How do I really make progress and movement and momentum?" Um, I think the highest I've ever I can take full credit for and in a reasonable amount of time was about 350 points.
That's
Yeah,
crazy. That's crazy. I've
yeah.
seen her do it with one of my clients. We did over 200 and it only took 2 months and he bought a house, guys. Within those 2 months, like after that 2-month period, went and bought a house, 21-day close, he's happy. So it's definitely doable.
And
What
let's actually what is the difference in scores? I mean, I think that that's relevant even on your side and even more so on your side than on mine. Like,
yeah,
okay, cool. If I get somebody from a 400 to a 600, that's awesome. That maybe still doesn't make them mortgage ready. So let's
right.
actually let's talk about this in reverse. Is there was a statistic, and I think it's actually like, because this is an old statistic that
Mhm.
said for every 20 points of score in a household with a mortgage, 2 car loans, and 2 credit cards. So that's a pretty normal American house. Like
Yeah.
2 people living in the house and there's a mortgage, there's 2 cars. I mean, even for me with my kids, like there's more than 2 credit cards, there's more than 2 car payments, there's definitely a mortgage payment. Cool. For every 20 points in score movement, you'll see at least a $2,000 per year cost, whether that's insurance, interest rates, all the things.
Mhm.
So if somebody is at a 700 and we can get them to a 760, we just saved $6,000 a year. If somebody is at a 640 and wants to get to a 740, that's $10,000 a year. And same thing, like, you see it every day, how many
Yeah.
programs change. Like,
Oh my
there's
gosh.
free down
You
payment money. There's
Oh, yeah. There
awesome free
Oh my gosh,
money,
yeah.
but
And not
below
to say that
certain
we can't.
markers.
Right, and it's not to say that we can't get you a mortgage at 500. We have programs that do that. However, the barrier to entry at 500 versus 700 is gonna be completely different, where once you hit that 700, you're getting a great rate, you're putting 3% down on a conventional, you know, versus you're at 500, you're not getting into a house for less than 10%, 15% down. They're asking for more skin in the game, right? Because of the lower score. Even the difference
Totally.
between 620 is where you can start getting a conventional and you don't have to be into an FHA loan. If you can get from 620 to 680, that makes a huge difference in your rate, which is how much interest you're going to be paying over time, right? So these little, like she said, these little jumps, they get you into that different bracket where now it's like we can get you a better deal, lower down payment or down payment assistance, and stuff like that. So it just changes the game and it makes it easier to get to the end goal of home ownership.
Yeah. So,
Yeah. What factors impact scores the most? And I know this is very like I've heard so many things from so many different people. So like, is it utilization? Is it the amount of credit? Like, what is the biggest, like, if someone had to target one area starting today, like what should they focus on to make the biggest impact in the shortest amount of time?
I can't answer that as one way,
Okay.
because it goes back to playing the game.
Yeah.
So I'm going to give a cheesy analogy here, but I promise you'll never forget this after this analogy is we tend to think of credit like we think of school, that we all start with an A and
Hmm.
then oops, we kind of tank that one quiz. Now we have an A minus. So
Hmm.
we kind of screwed up on one of our cards. We're an A minus. Oh, we kind of maxed out another one. Now we're a B plus because we forgot that homework assignment. Oh, our attendance dropped. We weren't really fully optimizing it. We're now a C minus.
Hmm.
Unfortunately, it's not an accurate way of looking at credit. It's not linear like
Okay.
this.
Okay.
A different way of looking at credit, and I can break down the percentages. 35% of your score is payment history. Great. 30% of your score is debt utilization, balance versus limit, only on revolving accounts.
Okay.
15% of your score is length of history, the average of all of your open active accounts. 10% is types of accounts, mortgage, installment, revolving, other, and 10% is going to be inquiries. Now,
Okay.
here's the thing though. It's not a perfect bar graph linear. It's not
Right.
school linear. A better way of looking at it from a visual representation is I think we've all on some level seen at least something gymnastics related.
Yes.
So humor me for half a second. If I went and showed up at the Olympics and I'm like, I'm going to compete in the gymnastics portion of the Olympics, and I went and walked up to the floor exercise and I did the most spectacular, perfect, brilliant, absolutely perfect front rollover ever done by any human being known into since the beginning of time, and then smiled at the judges. Am I going to get a perfect 10? No.
Yeah.
I'm going to get a 0.002 because my degree of difficulty is a 0.002. No
Right.
matter
Right.
how well I do it, I'm not showing any level of capacity.
Oh my gosh.
I'm not showing any skill.
Yeah. Right.
So 35% of our score, payment history, the way I like to look at it is that's execution. That's
Mhm.
did I do it perfect? The other 65% of our score is what am I capable of getting?
With the payment history part, if you pay it early, does that make a positive impact or does it matter? As long as it's paid on time, they don't care.
And it's not even fully on time. It's less than 30 days late.
Okay. Well,
So I
that's
think
good.
maybe like that's the advice that I've loved giving recently
Mhm.
is have a red light, green light list. Your red light list is everything you cannot pay more than 30 days late, also known as everything that's on your credit report. Your
Yeah.
green light list, screw it. Like, pardon my language, but screw it. If you are 40 days late, 60 days late, what you pay in fees, to heck with it. Who cares? As long as it doesn't go to collections. If it's not on the credit report, I don't care when you pay it.
Yeah.
So that's where all of the people that are adding accounts to their credit, I'm
Mhm.
like, do that with a little caution because
Now it's
you
tracking.
just took
And
away
now
your green lights.
yeah.
I
And if
mean,
you
like, I don't know
already
if you've ever been on a road trip, but I want as many green lights as I can get.
yeah. Yeah. And okay, you did say something though when you were saying with the credit you have revolving mortgage. What is other?
Other is either a pay in full monthly American Express. There was a huge litigation about this years ago. We're not going to dive into that. It's kind of boring, but basically, bottom line, American Express has two types of accounts. One is called
Yeah.
revolving, and that's the majority of their cards these days.
Yeah.
And then they also do have a true pay in full monthly, which
Okay.
goes into the open category because it doesn't have a true limit and it doesn't have a
Right.
true minimum payment. So it was getting inaccurately factored in these scoring equations.
Oh,
The
okay. Okay.
other thing that counts as other is collections, not
Oh.
charge-offs, because charge-offs usually are still revolving, but collections.
Oh,
Like,
okay.
here's a collection agency. There's no because it's not an installment. You're not making monthly payments. It's not
Yeah.
revolving. You can't run
Yeah.
it back up. It's not a mortgage. It's other.
Got it. Okay. That's good to know. And okay, so I guess in that kind of realm, right? And those others, does that also count for, say, like the Home Depot cards where you have a 60-day net, like net 60, net 30? Is that
Oh,
also
those, so a net 60 and a net 30 are only going to be on a business.
got it? Okay.
They are only going to be on a business, and you want to be really cognizant. I think that's probably great advice that we can both share, especially because so many of your agents are going to be self-employed. So many of the other vendors you work with, whether it's insurance or financial advisors, they're all going to be self-employed.
Mhm.
Always be aware of what business accounts you have and whether or not they report personally. Big example of that, Capital One, their business Spark card reports on people personally. Okay, well, if you're
Mm.
running your business correctly, you should be maxing that darn thing out every month.
Mhm.
But now your score is going to do this.
Yeah.
So maybe you either be aware of those statement closing dates or you shift to a card for your primary business use that does not report on personal. None of the business Amexes report on personal. None of the business, small business, like local regional banks report on
Okay.
personal. To the best of my knowledge, Huntington's business accounts do not report on personal. Like, there's definitely some different ways to play that so that it
Yeah.
actually sets you up for success.
Yeah. Okay. That's good to know. And what can someone do to improve their credit while living paycheck to paycheck?
That red light, green light is going to be a
Okay.
lifesaver.
Yeah.
Really, that red light, green light. Because here's the thing, even if you're fully maxed out, even if you're fully overextended, you pay that bare minimum on time every single month, and your visibility shows you've paid every single bill that's on that report on time for 6 months, your odds of getting at least a bump in your credit limit, even if you're not making a dent in that balance,
Mhm.
are significantly higher.
Okay. Okay.
And then other opportunities can open up to you to reshift, reallocate that debt. I will also say, don't talk yourself out of leverage. While credit and debt don't have to be equal, credit is equal to leverage if you allow it to be. Here's what I mean. I can't even like quantify or think about the number of people I talk to that have a free and clear vehicle and only have 10 or $15,000 in debt, in credit card debt, but it's killing them. It's
Mhm.
killing them because every month all they're doing is paying interest payments. And I'm
Yeah.
like, you have this car that is worth 20 grand. You have 10 grand in credit cards and you're annihilating yourself. Why wouldn't you use the car to pay off all of this? Now our
Mm.
utilization went to zero.
Mhm.
Again, even if we're at that 18%, guess what? I guarantee those credit cards are at 32%. So even if it's at an 18% car
It's
loan
still lower
and we
than
have a guaranteed start and finish date, we know
yeah.
for sure it is done in 4 years. And
Yeah.
we have a guaranteed exact monthly payment.
Yeah.
And now our score went up, our insurance went down. Now we can refinance this loan from 18 to 10,
Mhm.
and now we can play. Like, we can
Yeah.
make decisions.
Yeah.
We have bargaining power.
Do you ever suggest someone doing that with the equity in their house or
Yes.
um even like what are some of those what is the commercials we see? Oh, like the SoFi. Do you
As
suggest
long
those?
as it is a true unsecured loan and
Okay.
not a debt settlement company, yes, yes, and yes. If
Okay.
you are actually borrowing money, taking out a loan, I don't even mind Best Egg. I personally love, if you have military access, USAA does great unsecured loans. Credit unions will do great unsecured loans.
Okay.
Just don't do debt settlement. If you're going to do debt settlement, then at least humor me, get the free consultation, find out if you're eligible for a bankruptcy. If you are, file the bankruptcy.
Yeah.
I have never I've never had anybody tell me that they regret filing bankruptcy. I have only, and this is just like 30 years of finance banking credit, I've only ever had people say, I regret not filing sooner.
Mm, okay.
Because it's at what point do you stop hemorrhaging?
Yeah. You can
Like,
buy a house after 2 years of a bankruptcy, guys.
right?
The 7 year myth is not actually true.
Yeah.
So yeah, it doesn't hurt you as much as you think. And for a lot of people that are drowning, maybe that
Yeah.
is a good option. But talk to someone before you just pull the trigger. We're gonna make sure you have Alex's information too. So if that's someone you want to reach out to chat about it, because I know
Yeah.
that's a big decision, right? Like
Where is
it's
it though?
a
Hold on,
big.
I've got to show you. I have my official permission wand.
There
I
you
give
go.
people permission to do things that they know that they want to do anyways. I'm like, I don't nobody like officially gave this to me, but it's my
Yes,
official permission
yes.
wand.
But I think helping someone talk through it too, like, it's a big thing, it's scary, and just like for someone to be like, you can come back from this. It's okay.
Yeah.
It's not going to be the end of the world, which I think a lot of people are like, oh my God, if I file bankruptcy, like I'm never coming back. It's always going to be a permanent stain. It will not be.
Like,
Um,
fun thing to know, there's nowhere in the paperwork that says you have to get "I filed bankruptcy" tattooed on your forehead.
yeah, exactly. And if we know inflation, gas is $7 a gallon, guys. Like we're here to have real conversations, not okay, this stuff is beautiful and fluffy and it looks pretty. Like this is
Well,
what
and
is real life.
let's be real. Like, I like that some of my analogies are really corny, and this is one though that hopefully all of us can relate to on some level. If we know we have strep throat, if our kid has strep throat, yes, we're going to do honey. Yes, we're going to do tea. Yes, we're going to do lozenges. We're going to do something to soothe it, or even like a gallon of ice cream. Not that I've ever
Mhm.
done a gallon of ice cream in one sitting.
Not.
But but I'm also gonna go and take antibiotics, go to the doctor, say I need a round of antibiotics to
Yeah.
actually stop what's going on.
Yeah.
There's a time and a place where truly just stopping the hemorrhage is the most correct answer you can give yourself. And here's a fun myth. You can walk into a bankruptcy with a 700 credit score and you can walk out with a 700 credit score. You do not have to have a 500 credit score. The
That I
bankruptcy
did
court
not
does
know.
not care about your score. You don't ever have to go late on a bill,
Mm.
which makes your mortgage eligibility in 2 years so easy,
Yeah.
so fast.
Okay. I like it. And if we're looking to pay off debt, what are the debts that someone should pay off first? Are we looking at the highest interest rate or
This is one time I will defer to Dave Ramsey. I do believe in the snowball method.
yeah.
I do think that there's value in paying off higher interest rates. And again, going back to leverage. If we can pay off all the revolving first using the snowball method, if that's what we need to do, and that's a way that
Mhm.
I love. I'm sure you can put some links to it, and I'm sure you can help define it more clearly. I
Yeah.
want to be conscientious of time. The snowball method, not the avalanche method, the snowball, though. They are different, and I'm very specifically giving that one.
Yeah.
Revolving snowball method first,
Mhm.
because then our score goes up and then we can take a loan, then we can make moves. It's so often we don't realize that we're holding our breath. We don't realize we're
Yeah.
holding ourself hostage from these opportunities. I think that's the other, like, I know that's the other thing I hope everyone hears me say is do all the things before you need them, before you want them, because when you're in it is when you're not going to be able to get it.
Yeah. You're going to be stressed. Yeah. And okay, this is one question I really wanted to cover because I learned something new last week with you and the client that we worked with together. So, what items cannot be removed from a credit report? Because I thought there was a lot that couldn't, and you've proved me wrong time and time again.
The only thing that really, and I won't say it can't be removed, I will simply say is much more challenging. And we have to think about the logistics of what we're accomplishing if we remove it,
Yeah.
is anything public record. What I mean by public record is going to be a judgment, a
Mm,
bankruptcy, a lien, any of those items. And the only other thing that I will say again is can it be removed? Yes. Is it something I personally don't help with? At least not often. I will say I've made exceptions, but
yeah.
child support and alimony.
Mm, yes. Guys, don't go flock to her to try and get that.
You guys, I mean, here's the thing. There is so many steps that have to happen for child support to go on your credit report.
Yes.
And
Yes. It
for
takes a
me,
while. They're very lenient. And yes, I agree.
it's almost a principal issue against the bureaus that you guys, this isn't about moms, dads, anybody owing money. Like
Mhm.
we can talk about that a whole nother time over a really stiff beverage, whatever. That's politics. That's all the things. We're not doing that
Yeah.
today.
Yeah. Yeah.
What I will say though is part of it's a principal issue against the bureaus. If you're not going to reward all these amazing people that do take care of their kids and give them credit for all those payments they do make, then why are we going to mess with it on the other side?
Mhm.
Like I have a
Yeah.
lot of
If you don't get credit for making the
foundational.
on-time payments for it to raise your credit, then but we're putting the negative. I get what you mean. Yeah.
Yeah.
Okay. And guys, just so you know, that means late payments can be removed. Charge-offs can be removed. We can get accounts that are in dispute, collections. Um, we we removed a late mortgage payment, and I didn't think that that was possible. I was absolutely shocked, and I literally picked up the phone and called Alex and was like, "So, I don't want underwriting to see this. Can this even?" And I was like, "I think this is a dumb question. Can this even be taken off?" Because I didn't think those could
Yeah.
go away. But it went away for my client, and so that's why it's crazy. Like she's guys, man, the thing that's I'm telling you, the things that I've learned about credit that I just absolutely did not know, like, and even like going through scenarios with clients and where we can fix things and negotiating things once they're in collections too is something that can be done. Alex is very good at it. Um
That's something
pennies
else
on the
too. You
dollar.
guys, like I understand the value of having someone in your corner. I do. I do. I understand having a system and a accountability, but I do want to just also caution you. Same way we talked about credit repair companies, the traditional stuff out there, same thing about debt settlement. I'm going to tell you right now, they're not doing it for free. So if they're telling you 50 cents on the dollar, the reality is your same creditors, if you did it yourself, would go to 20 cents on the dollar.
Mhm.
They're taking a margin somewhere, and it's not like a piddly margin. It is a decent chunk of the pie.
Yeah.
Um, and again, if you're in that position, it's one of two buckets usually. It's very rarely somebody that's in the middle that has some options, whether it's a home equity or whatever. It's either somebody on this end that is truly financially well to do and loves this idea of, well, if I only have to pay half, that sounds great. And if it's too good to be true, it probably is.
Mhm.
They're just, they got stuck with $100,000 in debt during their divorce that they don't
Yeah.
feel like they should have to pay. So they want half off of it. Deal with it, suck it up, don't annihilate your credit. On the other hand, is the people that are truly drowning, struggling, treading water. Either file the bankruptcy or let's figure out if you're not eligible for a bankruptcy, which is fine. There's plenty of people that are right there in that weird cusp where they're just not eligible.
Yeah.
Let's figure out a correct stair step method. And if we're going to let it all go and settle these accounts, that's fine. Do it in your own control. You don't need a
Mhm.
company. I promise you don't.
Yeah. Oh my gosh,
Or
that's
just
awesome.
like have a resource that you pay an hourly fee to or a straight fee to. Like there's just better transparency.
Yeah.
We make choices every day about restaurants because we know that there's a tip or not a tip that's expected. We don't just go to McDonald's because a value meal is now $15. We go to McDonald's because we know that if it says $15, we're going to spend $15.
Mhm.
We go get a good burger at a sports bar knowing that when it says it's $15, it's going to cost us 25 for
Yeah.
the experience.
Right.
So go into it knowing where your money's going.
Yeah. That's fantastic. Thank you, Alex, so much. We're going to make sure that you guys have both of our contact information in case you looking to buy a house, you need help with credit. Also, if we did not answer your question and there is one that you want to ask, comment, DM us, however, get in touch
Please.
and we will
Yeah.
make sure we get the question answered. We're really here and we're giving the time today because we just want to educate people. We just want to make it easier for you guys to get to wherever you're going. We're not getting anything out of this, but I think it's important, right? Like
Yeah,
we're
and I mean,
all
we
about
want to do
helping.
a round 2, and we want it to be like what you want us to talk about. Like,
Yeah.
if you
Send
hated
us
all of my
questions.
analogies and you think I'm totally lame and you don't like my mom talk, that's cool. Tell me. We'll go a different direction. We'll spice it up.
We'll put you on the comedian circuit instead. We got it. But we appreciate you guys tuning in and listening. If you learned something today, also like let us know. Let us know that you learned something. It was a great interaction. And if there's something else you want to learn, we're here. We're your resources. I'm local to California. Alex is local to Colorado. We help
But I'm
people
nationwide.
there.
You're
Yep.
you're licensed in plenty of other places, and there's a
Yep.
lot that we can both do.
But we are both in more expensive states, so we understand
We feel
reality.
your pain.
We feel the pain. I'm paying $6.40 a gallon to like yeah, girl. Chevron is $6.39 right now. Yeah.
So I have an ex-husband and he's never contributed financially. Hearing that, I'm like, should I give you his address and you can siphon all of his vehicles?
They're free gas, free gas. But yeah, guys, we are here for you. We thank you guys for tuning in, for listening. And we'd love to do this again if you have other questions, other topics, anything that you want us to cover. So thank you, thank you, thank you. We'll see you guys next time.